Ever found yourself in the middle of a conversation about Bitcoin ETFs, wondering what on earth they are? Let's demystify that. ETF is an acronym for Exchange Traded Fund. These are a type of investment fund and exchange-traded product. In layman's terms, it's like a basket of securities that you can buy or sell through a brokerage firm on a stock exchange. ETFs are designed to track the performance of a specific index, sector, commodity, or asset, like the S&P 500 index, or perhaps a market sector like energy. What's inside this basket? ETFs can hold a variety of assets such as stocks, bonds, or commodities like gold. The aim of an ETF is to track the performance of these assets, providing a snapshot of the market it represents. So now that you know what an ETF is, let's delve into what makes a Bitcoin ETF unique. So, what exactly is a Bitcoin ETF, and how does it differ from a regular ETF? Well, let's dive into it. Just like a regular exchange-traded fund or ETF, a Bitcoin ETF also tracks the price of an asset. But in this case, that asset is Bitcoin. The key difference here is that investing in a Bitcoin ETF allows investors to dive into the Bitcoin market without actually owning any Bitcoin themselves. Now, why would someone opt for this? One major reason is the elimination of security risks. Bitcoin, like any other cryptocurrency, is stored in digital wallets. These wallets, unfortunately, are susceptible to hacks and theft. But when you invest in a Bitcoin ETF, you're essentially investing in a fund that owns the Bitcoin, which means you don't have to worry about securing a digital wallet. In essence, a Bitcoin ETF simplifies the process of investing in Bitcoin. Now that we've covered what a Bitcoin ETF is, you might be wondering, what are the benefits? Well, one of the primary advantages of Bitcoin ETFs is their increased accessibility. By trading on traditional exchanges, Bitcoin ETFs provide an avenue for investors to gain exposure to Bitcoin without the need to directly buy, store, or secure the digital currency themselves. Another compelling benefit is the reduced risk. While Bitcoin's price is notoriously volatile, Bitcoin ETFs can help mitigate this volatility through diversification. If the ETF holds other assets, such as bonds or stocks, alongside Bitcoin, it can help to spread and minimize risk. Lastly, Bitcoin ETFs come with better regulatory oversight. They adhere to the same rules and regulations as other ETFs, which promotes transparency and protects investors from fraudulent practices. So, in a nutshell, Bitcoin ETFs offer a safer and more accessible way for investors to get exposure to the Bitcoin market. So, are Bitcoin ETFs the future of cryptocurrency investing? Let's recap what we've learned. Bitcoin ETFs represent a significant development in the financial sector, providing a simpler and safer method for investors to gain exposure to Bitcoin. They allow you to invest in Bitcoin without dealing with the complexities of owning actual Bitcoins, such as managing cryptographic keys or dealing with blockchain technology. But remember, as with any investment, Bitcoin ETFs come with their own set of risks. The value of Bitcoin is highly volatile, and therefore, so is the value of Bitcoin ETFs. They should not be viewed as a silver bullet, but rather as a component of a diversified investment strategy. In the end, Bitcoin ETFs are an exciting development, bridging the gap between traditional finance and the burgeoning world of cryptocurrencies. While the future of Bitcoin ETFs is still unfolding, they certainly provide an interesting new avenue for investing in the world of cryptocurrencies.